Welcome everyone. In this session, we are going to learn about a candlestick pattern, hanging man. So we will be discussing how hanging man pattern is being formed, what are the requisites we have to check before considering a pattern as a hanging man, what is the psychology behind the formation of a hanging man pattern, and how we have to trade a hanging man pattern. So here, as you can see in a picture, a candlestick has been marked, and this candle is known as hanging man pattern. Hanging man candlestick pattern. So, what are the requirements for considering a pattern as a hanging man? Basically, a hanging man pattern should have long lower wick, long lower wick, short upper body, and a small upper wick. So these are the some requirements which we need for considering a candle as a hanging man. And this pattern works only when it is formed at the top of uptrend. As you can see in the picture clearly, here is the uptrend. So what is the psychology behind this pattern formation? The psychology behind this pattern formation is, as you can see, bulls are trying to take the market upside, and at a certain point what happened, market opened somewhere here, bulls tried to push it up further but didn't able to take it to higher level. Instead, what happened, bears overpowered and made the candle to close, or make the price to close at a lower level by forming a big rejection wave at the bottom. This is how a candle hanging man is formed, and this is what the psychology of hanging man pattern says. Basically, whenever a hanging man pattern has been spotted, we have to look for shorting opportunity or selling opportunity. So let's move on to the chart and see how we can spot a hanging man pattern and how we can trade hanging man pattern. Here is the example of Nifty 50 30 minutes time frame. As you can see, market is in a good uptrend. We can say it's bullish, and what happens, long rejecting wick, short body, and small upper wick has been formed. So whenever these three criteria, these are the three golden rules criteria which we have to look, and the three golden rules for this is similar to the patterns which we have discussed earlier, previous uptrend, and on these three criteria are remaining. So this is the golden rule for considering any pattern as a hanging man. So what we have to do when we spot this type of pattern is, we just have to enter at the low of this candle, keeping its stop loss at the high by giving some buffer. Suppose we keep our stop loss over here, so this will be our risk, and our reward will be somewhat this, which we will be going to achieve in this candle. Always maintain risk reward of 1:1.5 minimum. You can take risk reward of 1:2 or 1:3 also, but 1:1.5 is the risk reward ratio which you are going to achieve 80% of the time. Whereas using candlestick pattern trading strategy, 1 is to 2 risk reward ratio, you will be gaining 50 to 60% of the time. And in 1 is to 3 risk reward ratio, for 1 is to 3 risk reward ratio in candlestick pattern strategy, you will be winning 20 to 30% only. So the accuracy with 1 is to 1.5 risk reward ratio is highest. That is why I always say prefer 1 is to 1.5 risk reward ratio. Don't be greedy for 1 is to 2 or 1 is to 3. Be satisfied with a 1 is to 1.5 risk reward ratio and achieve great return on your investment. So I hope you might have understood how we decided the entry point, how we decided the stop loss, how we decided the target. Let's move on to another chart and see one more example. Again, Nifty 50 30 minutes time frame. As you can see, market is in a downtrend. Market is in an uptrend. And what happens? A hanging man pattern forms. Basically, this pattern I have marked here as a hanging man, but this is not a hanging man, because I have marked this pattern to make you understand that most of the student gets confused and treat this type of pattern as a hanging man. But the fact is that hanging man pattern should have a small upper wick, and as you can clearly see in this candle, upper wick is missing, it's flat top, so we cannot consider this as a hanging man. That is why I have marked this candle, so that I can explain you that this type of candle should not be preferred as a hanging man. So now, what candle can be considered as a hanging man? This candle is a hanging man. As you can see, small body, long wick, short upper wick. Similarly, as you can see, this candle which you are seeing is a hanging man pattern with a small body, long rejecting wick lower side and a small upper side wick. So you could have entered in this candle itself. When the low of this candle has been broken, you could have entered over here, keeping your stop loss by giving some buffer over here, since the size of candle is very small, and your target would have been somewhat this. You would have easily achieved 1 is to 1.5 risk reward ratio, and then you would have again got a re-entry over here, since this is again a hanging man pattern. So what would you have done is you would have entered over here, keeping your stop loss somewhere here by giving a buffer, since the size of candle is very small, so buffer will be also little bit larger than the buffer which we usually give, and then our target would have been somewhat this. And as you can see, you would have easily achieved the risk reward of 1 is to 1.5. So this is how you have to trade. This is how you have to plan your trade and act accordingly. This is how you decide stop loss, target, entry, and everything. But the main thing which we look is the 3 golden rules, and these golden rules should be satisfied before considering any candlestick pattern. First golden rule, uptrend, which is confirmed over here. Second golden rule, long rejecting wick. As compared to the size of candle, wick is long, so second criteria also fulfilled. First criteria fulfilled, second fulfilled, third small body and small upper wick, third criteria also fulfilled. we can consider this as a hanging man and trade accordingly. So this is how you have to trade hanging man pattern. Let's look some more examples. Here we have State Bank of India 15 minutes time frame. Uptrend, market is in uptrend. Long rejecting wick, short body and a small upper wick, and uptrend confirmed. So our three golden rule confirmed. Our three golden rule confirmed. So now we can treat this candle as a hanging man. And now as per our strategy, what we have to do is we will enter over here at the low of candle. We will keep our stop loss somewhere here by giving some buffer. If this much is our risk, then this would have been our reward, which we will be going to achieve somewhere here. Just a second, let me make it clear. This is our entry, this is our stop loss, this is 1 and 1.5 will be almost this much. So you would have achieved your target. You might have hit your target here also, and if not here, then here definitely your target would have got hit. So this is how you have to trade hanging man pattern. So in this way you have to trade hanging man pattern. One more example. Power Grid Corporation of India 15 minutes time frame. Clear uptrend confirm, long rejecting wick, short body and small upper wick. So our three golden rules are being confirmed. Uptrend confirmed, small wick, short body, long rejection. All our criteria for considering a candle as a hanging man is being confirmed. Now what we have to do is entry at the low, stop loss by giving some buffer somewhere here. If this much is our risk, our reward would be somewhat this, and this would have been our target, 1:1.5. So this is how you have to trade using hanging man pattern. This is how you have to fix your stop loss, you have to fix your entry, you have to fix your target. These are the criteria which you have to prefer before trading any candle as a hanging man. Now Tech Mahindra Limited 15 minutes time frame. Green bullish candle, small correction and then an uptrend. Long wick, short body, small upper wick and uptrend. So three golden rules confirmed. Our three golden rules got confirmed. So we can say that this candle is a hanging man and we can enter at the low. Our stop loss would be somewhere here. If this much is our stop loss, then this would have been our target. This would have been our target, which would have been achieved somewhere here, 1:1.5. Here your target would have been achieved. So this is how you have to consider candlestick pattern before trading. Here long wick, Euro USD 15 minutes time frame. Long wick, short body, smaller upper wick. Hanging man confirmed. Should we enter over here? Should we enter over here? Is this pattern hanging man confirmed for our trading or not? Tell me. This is not a hanging man trading pattern. Though this pattern is a hanging man, but we are not going to trade in this pattern because our first golden rule says previous uptrend. And can you spot any previous uptrend here? I cannot, because I can clearly see market has been falling, so it's a downtrend. Even if you consider this a small uptrend, then this pattern should have formed somewhere here. But what happened, after moving upside, Euro USD started falling down, and while falling it formed a pattern hanging man. So though this pattern has performed over here, but we are not going to trade when we spot this type of pattern in this type of downtrending market, because the probability of working this pattern is only 10%. 90% of the time this pattern will not work in this type of scenario or in this type of market. So always stick to our rules, be disciplined, have patience, follow the golden rules and trade accordingly. Because our first golden rule is not being fulfilled, we are not going to trade this candle as our hanging man trading candle. Though this is a hanging man pattern, but we are not going to trade in this pattern. Though it might have performed, but we will stick to our rules. We will not trading in this pattern. So this is how you have to trade. This is how you have to analyze the patterns. This is how you have to check whether your golden rules are being fulfilled or not, whether your strategy is fitting or not, whether your plan is working accordingly or not. So this was all about the hanging man pattern. I hope you might have understood everything about the hanging man, the psychology behind the formation of hanging man pattern, how we enter in the hanging man pattern, how we exit, what stop loss we keep, what are the golden rules, and what are the criteria for considering a particular candle as a hanging man trading candle. So this was all about hanging man pattern. I hope you might have got it very well and understood the concept nicely. So this was all about it. We will see you in the next session. All the best for your trading career. See you soon.